I want every single person in the XRP family, the XRP army, to know that XRP is the North Star for Ripple. It's our purpose. When we think about what we're doing on Ripple payments or Ripple Prime or Ripple Treasury or custody or RLUSD, this is all focused on how we can drive utility, trust, and velocity or liquidity around XRP and the XRP ledger.
All right, so Japanese banks are secretly transacting on the XRP ledger under NDAs. Only 3% of corporate treasuries have actually deployed AI, even though everyone says they will. The Bank of England just picked 18 firms, including Chainlink, for a lab that could rewire global settlement. And Coinbase just built wallets. Not for you, not for me, but for AI agents. What is going on? Let's break this down. Okay, so this one really caught my attention. 88% of CFOs say they're raising their AI budgets. Sounds great, right? But Citi surveyed 75 treasuries and found that only 3% have actually deployed generative AI successfully. 3%. So we've got this massive gap between what people say they're going to do and what they've actually done. And honestly, the bottleneck isn't even the AI technology. It's the data. Most corporate treasuries are still running on fragmented systems, multiple ERPs, different bank feeds, spreadsheets everywhere. You can't get reliable AI outputs from unreliable data inputs. But here's what's actually interesting. 22% of companies are already using something called agentic AI, where the system doesn't just analyze data, it actually takes action. Imagine an AI that detects a cash surplus, evaluates investment options, and executes the optimal allocation, all within preset governance rules 24/7. That's not science fiction, that's happening right now in early adopter treasury departments. All right, this is the one that I think people are sleeping on. The Bank of England launched what they call the Synchronization Lab, and they just picked 18 firms to participate. We're talking Chainlink, Swift, LSEG, Partior, serious players. So what is synchronization? It's basically atomic settlement using central bank money, meaning funds in the Bank of England system only move if the corresponding asset on an external ledger also moves. Both sides settle or neither does. And here's the part nobody's talking about. The Bank of England has quietly chosen this approach over wholesale CBDC. They're not trying to create a new digital currency. They're building a universal adapter that lets their existing system connect to any ledger, whether it's blockchain or traditional. Victoria Cleland, their head of payments, literally said this avoids rebuilding payment systems from the ground up. So while everyone's debating CBDCs, the Bank of England just went around the whole argument, and they're targeting a live service by 2027. Okay, so this might sound weird, but for 29 years, the internet has had a status code called HTTP 402, payment required. It was defined in 1997 and literally nobody ever used it. It just said reserved for future use. Well, Coinbase and Cloudflare finally implemented it with a protocol called x402. And here's why it matters. AI agents can now pay for API calls, compute, and data in real time using stablecoins. No accounts, no API keys, no humans involved. The numbers are real too. 500,000 weekly transactions, $600 million in total volume. Now, Algorand is positioning itself as an ideal settlement layer for this because of sub-cent fees and instant finality. McKinsey projects the agentic commerce market at $3 to $5 trillion by 2030. But let's be honest, Algorand's DeFi TVL is only $69 million. That's a rounding error compared to Ethereum. So the technical pitch is solid, but the liquidity question is wide open. So this literally just happened. Coinbase launched agentic wallets. Wallets specifically designed for AI agents to hold funds, execute trades, and pay for services autonomously. No human approval needed for each transaction. The keys are stored in trusted execution environments. The agent never actually sees the private key, and there are programmable spending limits baked in. Now, here's Brian Armstrong's thesis, and it's actually pretty compelling. AI agents cannot get bank accounts. They can't pass KYC. They can't get credit cards, but they can get crypto wallets. And if McKinsey is right that AI agents will handle 20% of global transactions by 2030, someone has to build the payment rails for that. But the market wasn't exactly thrilled. Coin dropped 6%. And honestly, the prompt injection problem is real. OWASP ranks it as the #1 vulnerability in AI applications. An experiment called Freza showed you could manipulate an AI agent into transferring money, even when it was explicitly told never to do that. So, we're building wallets for systems that can be tricked. That's the tension nobody wants to talk about. So look, what you're seeing across all 5 of these stories is the same signal. The financial system is being rewired for machines, not just humans. Japanese banks testing XRP under NDAs, CFOs racing to deploy AI in Treasury, the Bank of England building atomic settlement for any ledger, Algorand and Coinbase competing to become the payment rails for AI agents. This is all one story. The question isn't whether the machine economy is coming, it's whether the infrastructure will be ready when it arrives. And right now, crypto is the only payment system that doesn't require a human identity to use. That's not a feature anyone invented. It's just how blockchains work. And that might end up being the most important thing about them. Drop a comment. Do you think AI agents should be allowed to manage money autonomously? Or is that a disaster waiting to happen? Subscribe if you want the kind of analysis that connects the dots others miss. I'll see you in the next one.